Success is the child of drudgery and perseverance. It cannot be coaxed or bribed. Pay the price, and it's yours. Orison Swett Marden. My friends, the nice thing is our drudgery, I don't consider it drudgery, is the fun of tracking these charts every single day for simply 10 to 15 minutes. And the perseverance part is every single day. If you'll just do it, just set aside the time. I do it, friends, with my busy schedule. I don't just do it. I bring this program to you every single day. I do this in addition to my own personal charts. You can do this. Set aside 10 to 15 minutes, learn to track the market. If you will set your mind to it, I'm telling you, you can do it. And if you follow our success method using the average true range, and again, just the math that is encompassed there. And I'm going to put both those trainings. They are recent. They're valuable. If you haven't listened to them in the last couple of weeks since we put them out, or if you have, listen again. Take notes, learn it. If you can see to it that 4 out of 10 trades that you do are successful, you will be successful. And the harder you work, the better you get. Soon it's 5 out of 10 trades, 6 out of 10, and you really don't have to go any further at all. But you can be successful if you manage losses. As we teach in both those trainings, they go together. I really want you to have those. I think as far as all the work I've done here all these years, my Hakinashi training was really good. I remember doing all that. I put out so much good content. But those last 2 trainings, I think is the best work I've ever done. And I give it out for free. So check out the end of this video. Take those. I hope you are as impressed as I am hopeful as to all they will do for you. Now, let's jump into these charts. We see stocks pulling back for the day, bonds and gold up, Bitcoin down. Let's look at the S&P 500. It is still going up strong, close to crossing over, going up on this weekly chart. Again, we will continue to watch. It's just barely crossing over now. We'll see what it does on Friday. But a nice big green up candle. Derivative oscillator's already gone positive on the 2-day. We can see, go back, and we can see where it crossed over going up on the 18th, Friday the 18th of March. That was representing Thursday the 17th, Friday the 18th. It's a 2-day candle as we look at this latest 2-day candle that finished forming. That is the Tuesday, Wednesday, nice green up candle, price percent oscillator, derivative oscillator heading up. And on the half day, again, we can see where the negativity crept in, down just a little bit, 0.62% up in the morning, losing some of that in the afternoon, still above the 2-day and the half-day trends. Price percent oscillator positive heading down, derivative oscillator losing some momentum. First time in a few days going down. So we may be poised still for a weekly vertical crossover at the end of the week. We shall see. Now, the S&P 500 going from that to the NASDAQ 100, the tech stocks, looks very similar. Again, close to crossing over, going up. Price percent oscillator close. Derivative oscillator already gone green. We look at the candles. We can see them moving up quite nicely, about the same size, higher high. We look at the 2-day, and of course we had that 2-day, same day as the S&P crossover going up. It's not a recross. Why? Because the weekly is still down. And again, that weekly candle doesn't finish drawing until the end of the week. Prices well above the 2-day trend line. And like we said, derivative oscillator heading up too. We look at the half day. We can see a slowing in the morning, some down movement in the afternoon. Price percent oscillator still positive, moving down. Derivative oscillator green, losing some momentum. So overall, stocks still have some energy, trying to push themselves over, see if they're going to have it to cross over at the end of the week. Now, let's go to bonds. Bonds up for the day, 0.78%. Bonds had just been trundling down, 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 down. We had a few instances where the down slowed. We had a 2-week period, the week ending the 25th of February and the 4th of March, where bonds slowed in their down movement, tried to move up, and then rolled over 3 more weeks. And we get to this week, which is a solid green candle, slow down in the down movement, not hitting the low of the prior week. Derivative oscillator is losing some downward momentum, still negative. Price percent oscillator also not going down at the stronger angle that it had been the prior week, still quite negative on the weekly chart. We look at the 2-day and we see a bright spot, the first going all the way back to the beginning of March, the first green open box candle that we have seen, this latest one on the 2-day chart. Derivative oscillator still negative, price percent oscillator negative, heading up but hasn't crossed over yet. So again, overall still lots of negativity in the 20-year government bond ETF. Now, we look at the half-day chart, we can see where things were up in the morning, a little further up in the afternoon. Price percent oscillator heading up, derivative oscillator heading up, but not enough to change anything yet. Still lots of negativity there on 20-year bonds. What about gold? Well, we had gold peak, as we've talked about since that happened back on Friday the 11th of March. It's just been moving down over the last 3 weeks. Price percent oscillator, nonetheless, on this weekly chart, still positive, a little less than flat. Derivative oscillator has been going down, still green, but going down since the peak, and it's going down further this week. We look at the 2-day chart, and of course this 2-day candle is a solid red down candle, no wick on top, wick on the bottom, price percent oscillator heading down, derivative oscillator flat, like we said, up a little bit for the day, 0.80. What are we maybe hoping for here in gold? Well, I'm hoping that this down movement comes to an end and that we have a 2-day recross. That means the 2-day crosses over going up like we saw it do back on the 2-day recross that occurred in mid-February, and that would then jump us back into an up move on gold. And we'll see if that happens. If it does, of course, we'll be telling you to look out for it, but it ain't happening yet. Let's look at the half day. Of course, we had 1.5 days of strong down movement in gold. That ended on Tuesday morning, and then slowing down in the down movement, we can see Tuesday afternoon and then up on Wednesday. So we haven't had enough of movement to cross over yet. Derivative oscillator still -2, and we'll keep an eye on it. But I'm hoping we will have a 2-day recross in the not too distant future. But that's just a hope, and we don't bet on hopes. We don't bet at all here. We follow trends. Lastly, we will go to Bitcoin. And by the way, Patreon members, just did your charting crypto. I'll be emailing that out to you. And like everything we do for the Patreon members, you can always find it at the Patreon page. In case for some reason you don't get an email from us, always check the Patreon page because we put everything there for you too, in case it goes into the spam box. What do we see on Bitcoin? Down for the day, depending on the index we look at, looks like the futures down about 1.5%. Grayscale Bitcoin down 2.5%. New York Stock Exchange Bitcoin Index down 1.34%. Nonetheless, it is an up week for Bitcoin and may very well be a weekly vertical crossover by the end of the week. We've been talking about that, 3rd day now on that. Even though Bitcoin was down for the day, look at the 2-day. Again, we can see we've got an up candle, not much of a wick on top. Price percent oscillator losing a little bit of its energy. Derivative oscillator still heading up nice and strong. And let's look at XBTF, the futures index. We can see where some of that weakness sprang in the morning and not much of a recovery. In the afternoon, price percent oscillator still positive. Heading down, derivative oscillator positive, losing momentum. But again, as long as things don't get too radical in any pullback, we are hoping for a weekly vertical crossover at the end of the week. Grayscale Bitcoin looking the same way. And I'll show you one thing that I shared with our Patreon members. This is BITW. This is the top 10 cryptocurrencies as by weight of market share. And we can, of course, see it crossing over, also going up. Bitcoin tends to drag the entire crypto space up with it. You will see on Ethereum, same kind of thing. Ethereum also trying to cross over, going up. So that is where we are, my friends, as we hit midweek and our stride. What do we do on Wednesdays? We encourage you to back away. There's a great training on that. That training is all about backing away, looking at the weekly charts on all the ETFs and stocks that you follow, and trying to get an overall feel of where things are. Backing away from the minutia, that is seeing the forest for the trees. That's what we like to do on Wednesdays. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.